What is going on YouTube, and we are back with another one. Alright guys, so we kicked off a fresh brand new week in the stock market. Now I know out there in the field it was blood in the streets for the growth plays, and it's not just you, my portfolio also got the smackdown from the markets. However, you guys know, regardless of what the markets throw at us, we hold frame, we stick to the strategy that is to catch these cheap plays that are out there, build our portfolios now to get ready for the climb. Now, we're kicking off the week right. I'm coming at you with a couple of plays that you guys should not sell out of, regardless of what the market's doing, to get you guys in the right frame of mind to tackle this volatility. So I got a jam-packed one for you. So before I kick things off, I'm gonna need you guys to hit that like button for me. And if you're new, join the movement by hitting that subscribe button. All right guys, you know what time it is. Now before we jump into our main event, I wanna touch on a couple of plays. Our first, that's BioCry, ticker symbol BCRX, and this one's cooled off from their heights. Now they're currently standing at $9.73. You guys know I talked to you about buying in strength and buying in weakness. This is a classic case of you guys want to be buying this play in strength. So when they show some momentum, then you can pull the trigger on this one so you can be confident that this one has found its floor after the cool off in that stock price. Now you guys need to know the market is out to confuse a lot of investors. This one had some good news just the other day. Their product in pipeline released some good results. So it shouldn't warrant a fall in that stock price, but we know the market is being very testing on these growth plays. So when it comes to investing right now, you guys need to separate from what the share price is doing and invest into these quality plays that are moving along with their business. And this is one of those. So when the market does turn, this is a play that belongs in the mid-teens. So I want you guys to know that. Next up, we've got Alpine 4. Now what you guys must know is this is a play that's deep within penny stock territory, so they are going to be very volatile. In addition to this, they've got very high expectations placed upon the play, and when you put these two things in a weaker market, that's why you've seen that stock price come down severely over the last couple of weeks. Now they did release good news today. They said their platform business, quality circuit assembly, is firing on all cylinders. They're expecting to hit around 1.3 million in revenues in March and going to do around 2 million in April. So from a business perspective, Alpine is doing what it needs to do for the investors. But now what you guys must know is in these market conditions, PR is not going to save these plays. They need full stabilization of the market and for the market to turn before that stock price starts to flourish. All right guys, so it's time for our main event. We've got Draftkings, ticker symbol Dkng. Now, just recently I had a lot of you guys reach out to me and say, should you snap this one up when they're in the mid 60s? I said, whoa, let's let this one cool off. We're gonna grab them at a better entry. Now currently standing at 58.25, a better entry on this one is emerging. Now, if we're talking about tailwinds, this one has got a lot in the tank to push that stock price higher in better market conditions. So we know a lot of stimulus checks have been rolled out now, and don't be surprised to see some of that money being flown into plays like Draftkings. A lot of people are into sports betting. Also, as more states come online, legalize sports betting, that's going to give Draftkings more room to run. Now you got to remember, this is a big win for both sides. Not only does it benefit Draftkings, but it also gives the state a lot of additional tax revenues that can go a long way. Now the third is the continual rollout of the Draftkings platform as they make these partnerships. Now to put on your radar that news was dropped today, they've gone ahead and partnered with the WWE. So once again, this is a good business move from our play because it gives them the exposure to a legacy and popular sport. Now not to forget, it was only the other day that they partnered with the UFC, and as you can see, this play is gaining momentum as they're leveraging of the popularity and the reach of these brands. Now that's why I say to you guys, you want to detach from the share price movement, because look on the day guys, this play's dropped almost 9%, but they partnered with a significant player in the sports world, which is going to give them millions of additional revenues as we go through the year, allowing them to hit that 1 billion mark that they've got for guidance. So that's why I say we're going to invest into the quality plays, just detach from the short-term price movement. Now currently standing at 58.25 guys, check me out. This one has support around the $58, $59 mark. As you can see, it's hit that over the last couple of months. But we want to see if this breaks support and moves to its next support line. So I would hold off on this one and see if you can grab them in the mid 50s. $55, $56. That's the target entry for Draftkings right now. All right guys, so those are the plays. We're going to hold steady, ignore the market noise and buy on good entry. All right guys, let's talk about how we can level up as investors. Now I'm talking to you guys about calm in panic. Now a lot of you guys know that I'm very chilled when it comes to the stock market during this volatility, given my experience as an investor. Now I'm going to give you guys 3 tips to help you guys to remain calm during this market panic. So the first guys is take solace in history. We've been through wars, we've been through recessions, we've even been through a global pandemic, and each and every time the stock market has bounced back and bounced back stronger. So you guys need to take confidence that the stock market is a powerful tool to build you wealth if you're able to be patient and invest your money into quality plays that are in the market. And the second, guys, is to expect red or at least flat. So don't go into the next trading day expecting your portfolios to jump up 10%. Expect red in the market. Now this is going to put you guys in the right frame of mind, so it's going to allow you to pick up the plays that are cheap. That's the thing. So you want to focus on the cheap plays and not focus on your portfolios rebounding right now. I'm going to give you guys a situation. Let's say I told you Draftkings is going to hit $75 tomorrow, or Draftkings is going to hit $55 tomorrow. Which one would you rather take? I know which one I'd rather take. I'd rather take Draftkings at $55 tomorrow because it's going to allow me to load up my position, because I know Draftkings is going to eventually hit that 75, whether it's 3 months down the line. So by that delayed gratification and loading up tomorrow, for example, when Draftkings is 55 in our scenario, it's going to allow me to make much greater returns. So guys, you just need to shift your mindset to picking up these plays on the cheap, and eventually you will see a rebound. That's how you guys build that wealth in the stock market. Now the third is that you guys refresh yourself on your diligence note. So take a Draftkings, for example. We've seen that stock price come down 9%, but I wasn't fazed by that in the slightest, because a quick check over my diligence notes over the reason why I invested into Draftkings in the first place is going to tell me a lot of things. The market is expanding. It's going to tell me they've made several partnerships, and I already told you guys, UFC, WWE, and various others throughout the year, and that they're set to hit that 1 billion in revenue by the end of the year, and it could be higher if we see more states come online. So there's various catalysts that can come into play that could push that stock price up. So just a quick refresher, the diligence notes has reminded me this is a solid play and to ignore the short-term price movement. So guys, do apply those 3 things. It's going to help you guys better weather the storm and come out on top with me after the market turns. Alright guys, we're rocking with the channel, you know what time it is. Now this question comes from Ash, says, hey Sankey, awesome content as ever. In regards to penny stocks, when it is a speculative play, how far would you let it drop before you cut your losses? Would you consider averaging down in such situations, or see it as throwing good money after bad? So this is a great question, and I know a lot can relate, so it's going to help a lot of people out. So when you're down on a play, it's less about how much you're down and more about the fundamentals. So how cheap or expensive that play is on a valuation front, and what catalysts they've got coming up to push that stock price back up to the surface. So imagine being down on a play, you sell out of that play just for them to announce that acquisition that over the course of the week or over a couple of days pushes that stock price back up to the surface. That's why I say you guys want to know your plays inside out, refresh yourself in your diligence notes so you know exactly what you're invested in. Now also, I always say when you invest into these plays, invest money that you do not need for 12 months, at least 12 months. So money that you don't need to pay your rent, to pay your gas bill, to fix your car. This is going to allow you guys to be patient with the stock market. So if you're down on a play, it's going to allow you guys to hold tight, to wait for that stock price to increase. It's super important, guys. Only invest money that you do not need for at least 12 months. Now you mentioned, should you be averaging down on the play? Now what you guys need to know is just because a lot of plays are down doesn't mean every single play is right for picking up and loading up your position. When it comes to dollar cost averaging down, there's 2 things you want to bear in mind. The first is, should you be buying this play in weakness or into strength? And you guys know I've taught you that. The key difference here is we buy into strength on more speculative plays that maybe make little to no revenue, or the market is just a lot harsher on. So we buy those in strength to ensure or give us more confidence that that play has found its floor. The second thing you guys want to be considering is the concentration that you have with that play within your portfolio. So for example, let's say you're in a penny stock play and it's taken up 25% of your portfolio. And if you've been rocking with the channel, I say never ever have a play that's above 10% in your portfolio. So if you have a penny stock play that's 25% in your portfolio, but the price is beaten down, you need to be focused on how much of your portfolio is being concentrated after you've dollar cost averaged down in that play. Because if you keep dollar cost averaging down, your portfolio concentration might jump from 25% up to 30%, 35% even. And therefore you're increasing your risk in your portfolio, and you want to keep your portfolios diversified. So when your dollar cost averaging down, keep those 2 things in mind. Alright guys, so that wraps things up. Do hit the like button for me, helps the channel out, and if you're new, join the movement by hitting that subscribe button. Also check out the link down below to the Patreon. We can join our team of investors over at the Discord and connect with like-minded investors like you and I. As we go for the rest of the week, you guys know I'm coming at you with a ton of videos to ensure you're prepped and ready to continue dominating these markets with me. So I'll catch you on the next one.